In this video, I'm going to talk about how to strategize during a market correction. Hello, stock traders. I hope all of you are having a fantastic day. Risk management is so important. If you can be out of the market during those times when the market is heavily going down, it will make you a lot more profitable as a trader. We have so many good things to talk about. All I ask in return is that you hit that most amazing and wonderful like button. Also, consider subscribing and turning on those bell notifications so you get notified when a new video comes out. The market has been on quite the bull run, but there are always those times of correction. In today's video, I am going to cover my risk management strategies that I use during times of a market correction. Why should you care? Risk management is a really important part of your strategy for success. I don't want to be in the market while it's in a downturn. Now, I am not a financial advisor. I'm just a stock trader who's had a lot of success over the last couple of years. So far this year, I'm up 172%, right at the midpoint of the year. And in 2020, I had over a 1,400% gain. I would not be able to achieve that level of success in the stock market unless I was pulled out of the market and had a knack for pulling out of the market during times of a correction. For example, when everyone was talking about coronavirus and it was becoming a big thing, I was selling positions and having cash on the sidelines. There are strategies that you can use, like the Elliott Wave, that can help you predict these downturns before they happen, or at least give you an idea when they're close. Let's go to the chart and take a look at the SPY ETF, and we are just at the beginning of a downturn, so the timing of this video is absolutely perfect. So as you can see here, I am tracking the Elliott Wave. If you have no idea what I'm talking about when I say the Elliott Wave, the Elliott Wave is a 5-wave mathematical sequence that tries to determine human emotion on the stock market. So as you are tracking here, we have wave 1 here, which is an impulsive wave upwards that I'm tracking on the SPY. Then you see wave 2 that is a pullback. Next we have wave 3, which has to be the longest of the waves, and so there's different rules associated with the Elliott Wave. I'm not going to go into a lot of the rules, but there are reasons why this is wave 3. Next, as you look at my cursor, you can see wave 4 is this pullback here, and then wave 5 is very impulsive. It moves up very quickly typically, but it gives you some nice warning signs of when it's over. Okay, so for example, wave 1 and wave 5 are usually the same length, and so when you are at the same length that wave 1 was, you need to be concerned about a market downturn. Another thing I like to look for on the daily chart is I like to look at the MACD and what it's doing, also paired with the RSI. Both things together help to give me a clue of what's about to happen. For example, here at the beginning of wave 4, you can see how this downturn happens on the RSI. This is wave 5 right here, and you can see it's starting to roll over. And so this is a perfect example because I believe that we are just starting a correction. So at the time of this video, I have already started to sell a lot of my positions and hold cash. So you can see this turn over here on the MACD. And so this was the warning sign before this really bad day right here. Okay, so what do you do when this happens? Let's say you see this on the MACD. What do you do with that information? Well, in my opinion, and this is just what I do, first thing I do is I close all the call options on any call option that I have on any stock. I don't want to be in a call option during the time of a market downturn. So during a downturn with any stock that I have in the market, I want to be stock only. Options are too volatile for this time on the chart. The second thing I do is when I've hit an exit point on any of the strategies on any of the stocks that I currently have in the market, when I close them, I will leave them as cash. I will hold them on the sidelines until we show signs of a market recovery. Third thing I do, if I buy new stocks and new positions at this time, then I'm only doing those things which I have a very high conviction rate in. Those are strategies that I've had a very high success rate and that I am very comfortable in trading. In bad markets, the insider swing play will work as long as the market isn't too awful, and that is the main strategy that I use. Sometimes I can get into one, especially if I have conviction in an insider buy, and have success. My second best strategy right now is the PDUFA run-up play, and I know that these stocks can go crazy because they have that solid date that the FDA is reviewing that decision. It can be successful in trading these, and so I will typically still do that strategy even during a market downturn. You might be asking yourself, yourself, well, what do you look for before you enter back into a position? And so as you look here on the chart, this is another wave 5 here. And so then we had the roll over here, and then we had the MACD negative cross, and then we went through a 3-wave correction that happened right at the beginning of 2021. I didn't have full confidence that we were out of this wave completely until I started seeing a bottom form here where we're starting to have positive momentum on the RSI over multiple days. The next thing I was looking for was for the MACD golden cross. This gave me more conviction that we were entering into a new 5-wave sequence. At that time, I'm looking to enter positions that are right on support levels. So if you don't know what I mean by support and resistance levels, I'm looking for good deals on stocks at that time. I'm looking for stocks that have been beat up and fit my strategies. Hopefully this helped you to give you just a little bit of direction what to do when we start to see market downturn conditions. If you are wanting warnings on when this is happening on the overall market, then I recommend our Patreon group. We have a link in the description down below, and I always cover what's going on in our Discord that's attached to that Patreon group. If I see a market downturn coming, I make sure the entire group knows, and then I give clear strategies of what I'm doing so that they can either follow that or at least have some sort of plan for how they're going to react to the market. For the small amount that it costs to be a member of that group, you will easily make it up with one great trade, or by being out of the market during one of these downturns to where you don't lose all the money that you worked so hard to gain. I so appreciate all of you who support me by subscribing to the YouTube channel, and also all of you who support us through Patreon. I hope that this video really helped you out. Please remember to do good with your profits, and Raythoven out.